Hello, I am John Najarian, and RebelCon 2022 is almost here. We do have a virtual pass. The virtual pass gives you full access to everything, all the streams, the live trading sessions, all of our fabulous keynote speakers. So to learn more about what's going on at RebelCon 2022, whether you're in person or virtual, check out marketrebellion.com/Dallas.
Hey, welcome back, Market Rebels. Happy Friday, everyone. And once again, no surprises, another wild day on Wall Street. S&P up about 1.3%, and then right at noontime, sold off right into the close. I think we got a little tiny bounce at the end, but finished up about 1% down. But in markets like this, really in any market, but especially when you get this kind of volatility, it can be really hard to try to follow trends. And so a little tool that traders use, professional traders, is to not only use your candlesticks, which are invaluable, but there's a variation on them that is called a Heiken-Ashi candle. And I just wanted to share that with the group in here for anybody who might not be familiar with Heiken-Ashis or what makes them different or why they are so special. So let's take a look at it. So the Heiken-Ashi, what it is, it's from the Japanese candlestick charting, and so it's a Japanese word that translates to something along the lines of average leg or average bar. And as you'll see here in a moment, the formulas contain some uses of average. So that's where this is coming from. So it's an averaging method using traditional candlesticks. So in a lot of ways, they will look like regular candles, but we're just going to do some tweaks to the formulas. And what we do, the reason that we use these is that it produces smoother charts for trend following. So once again, if you're trying to look for a trend, this is going to be a better type of chart to use. Now, you can also use it for intraday. So if you're a short-term trader and want to use a Heiken-Ashi, you can use those as well. They will work in any time frame. So let's start by taking a look at the calculations. What we're going to do is look at the open, high, low, close. So today's opening price on a Heiken-Ashi will be the average of the previous day's Heiken-Ashi open close. So notice we are not using a regular candle unless it is the first start of our chart. So we're going to look back one day. We're going to look at the open and close on that Heiken-Ashi candle. We're going to add them up and divide by 2. We're just going to take the average. And that is going to be the opening price. Now notice that that's contrived. It might not be, in fact, in most cases, isn't going to be the true opening price. And this is why, as you'll see when we look at the chart, you will never, ever get a gap on a Heiken-Ashi. And that's because it's forced. We force the opening trade to be halfway of yesterday's candle. Now, what about today's closing price? Well, we're going to take the average of today's true open, high, low, close. So notice the little twist here. We're not using yesterday's. That's what we did for the opening price. But we're going to take today's open, high, low, close, add them up and divide by 4, and we're just going to call that the closing price. So again, it's an averaging method. It, again, is going to be a contrived price. Is probably not going to be the actual close. And so we're just going to call that the closing price. The highs and lows will always remain the same. Today's high is going to be the true highest value from today, and today's low will be today's lowest value. So those stay the same regardless of the type of candlesticks that we're using. So I know it can sound confusing, but it's kind of easy. But let's take a look at how it would work. So the thing to watch for is that what we are changing is the open and close. The highs and lows stay the same. So here's the way that it works. Let's say that this is yesterday's candle, and we had an opening trade of 100 and a closing of 102. And we know that's the open and close because it's a green candle. High trade was 103, low trade was 99. And let's just say that this is a Heiken-Ashi candle. All right, so, or even if it weren't, we would still do these same formulas to come up with our next candle. So what happens today? Well, today's candle is going to say, let's look at the open and close from yesterday, 100 and 102. We're going to add them up and divide by 2, which is 101. And that is going to be our opening price. Again, it's not necessarily the true opening. We're just going to force it to be right there in the center of yesterday's candle. Now, what about the closing price? Well, here again, we have to look at an average, but we're going to look at the actual open, high, low, close from today. So let's say that these are the actual numbers. Have an open of 102, high 106, low of 100, close of 104. We add those up, divide by 4, and we get 103. So we're just going to arbitrarily say that the close was at 103. Now, because the close is higher than the open, it's a green candle. The high and low will stay the same. So the high looking over here is 106. That is today's high. And the low is coming from the actual low of 100. So this would be the Heiken-Ashi candle. But notice how today's candle starts at the halfway point of yesterday's. And that's why you're never going to see a gap in a Heiken-Ashi chart. So let's take a look at how we read a Heiken-Ashi. If you see green candles with no lower shadows, it shows a strong uptrend. Now, if you have candles with a small body, that's the little box portion, surrounded by upper and lower shadows. So we're getting shadows, or wicks as some people call them, on the top and bottom ends. That shows indecision. It's going to look more like a doji, and that's where you have to start being careful and saying it looks like the trend might reverse. Now, if we get red candles with no upper shadows, then that will show a strong downtrend. So notice how they work in opposites. If we're in an uptrend, but with no lower shadows, that's strong. So green candles with no lowers, or red candles with no uppers. And that's when you're going to see a very strong trend. So for example, here's a standard chart, candlestick chart. And if you look, kind of alternating red and green candles. That's what makes it kind of hard to discern a trend. But watch what happens. We're going to take this same time frame, same everything. We're just going to click on Heiken-Ashi and watch how it starts to illuminate the trends. You see, you don't get all those alternating reds and greens. I mean, you will in some cases, but for the most part, if you have a very strong trend, it will show up. And part of it's because of the way that the math works out. It's just because of this averaging method. You've got to beat the averages in order to stay in the uptrend. So let's take a look at some of the calculations that we talked about, some of the ways to read it. Notice through here, all right, we've got this nice big uptrend. What did the rule say on how to read it? If you have a green candle with no lower shadows, it's a strong trend, and that's exactly what we have here. Now, we do have upper shadows, but if we have green candles with no lower, that is a strong uptrend. On the flip side, let's go over to this over here. We've got some red candles with no upper shadows. That's going to show a strong downtrend. We do have lower shadows, we just don't have uppers. But look what happens when we start getting into periods of indecision. You see how we get these little small-bodied candles, like little doji in here? But we get shadows on the top and bottom. And up into here, we're starting to see some shadows on the top and bottom. And that should start giving you some clues that things are getting a little soft. It's getting to where traders are becoming a little uncertain. And that's really what it shows. Now, it's not necessarily going to show you the exact day on which it turns, but it can certainly give you some good insights into where to buy, sell, hedge, roll, and morph, where to place your different strikes for different strategies. But a Heiken-Ashi candle is a very good tool, and so I hope that helps. So the thing to understand is that when you change the way you see charts, you're going to change the way that you see trends. And if you do that, you're going to change the way that you make decisions, and that is going to lead to better results. Now, to close before our holiday weekend, I wanted to show you one of my favorite quotes from Charles Darwin that really highlights the importance of education. It says, ignorance more often begets confidence than knowledge. So think about that. You don't know what you don't know. But because of that, you think, oh, I know everything there is to know. I don't need to have any type of a coach or anything because I've got it all figured out. And that's exactly what this means. And so we like to show people just how much there is to know. There's a lot of moving parts. And so for anybody who is serious about trading, we'd like to invite you for a free 30-minute one-on-one consultation with one of our world-class coaches. We've got people from decades of trading experience on the trading floors. We have Elliot, who came from the Options Institute at the SIBO, one of the probably the world's most authoritative figure in the educational world, the Options Institute. We have coaches from amazing backgrounds, and they can all show you the things that you don't know. And you'd be surprised what they can fill your head with in 30 minutes. So, hey, it's risk-free. Give them a call. Phone number is 888-809-8058. And we hope that you would do that. And if not, we want to wish you a very good and happy, safe holiday weekend. And we'll look for you on Thursday next week. Have a great weekend, everyone. We'll see you then.